everyone. Welcome to the 2020 Make It Big conference. I'm your host, Beatrice Este with BigCommerce, and today I'm here with Jeff Richards, Managing Partner at GGV Capital. Thank you so much, Jeff, for joining us here today. I'd love for you to kick things off by introducing yourself and telling us a little bit about how you got started in e-commerce.
Sure. Well, my name is Jeff Richards. I'm one of 6 managing partners at GGV Capital. We're a $6.5 billion venture capital firm that focuses on global investing across Asia and the US predominantly, Southeast Asia, India, Latin America, also part of our global strategy. And we've been an e-commerce investor for a very long time. We were the early venture capital backer of Alibaba Group, which is one of the largest e-commerce players in the world back in 2003. We invested in Alibaba when it was about a $10 million business, and today it does several hundred billion of GMV. So long experience in e-commerce, and we probably have 20 or 30 portfolio companies in the space.
So let's talk about the transition from legacy scoping to DTC brands. Walk me through the shift we've seen in investing over the years.
Well, I think the concept of DTC really rose up over the last 5 to 6 years as people realized that they could sell products directly over the internet and predominantly through social commerce, through Instagram, and other venues. Because if you go back 10 years ago, selling products over email wasn't a very effective strategy. There was no real way to reach consumers other than display advertising on the internet, which wasn't terribly effective either. And so really, as social cropped up with Facebook and Instagram and Twitter and other channels, you saw this whole rise of the DTC brand and companies like Warby Parker and Allbirds and others that really kind of pioneered the space, going direct to consumers. And the advantage for merchants is obviously you capture all the margin. So when you sell through distributors or retailers, you give up a lot of your margin. And the attractiveness of DTC is being able to capture all that margin for the company itself. Now, there are brands like Nike and Lululemon that have been selling direct to consumer for years through their own physical retail stores. And so to some degree, what firms and companies and brands have tried to replicate is that in-store experience online. And we would argue that we're kind of in the second inning of that. So the first inning was really, the launch of that whole category 5 or 6 years ago. And now we're moving into a category where folks are figuring out how to profitably acquire customers, how to retain those customers, and how to build innovative relationships with them over time, like Peloton has done, where you can drive a large percentage of your revenue from recurring revenue if possible.
And for those tuning into this session, maybe folks who are interested in launching their own DTC brand or simply just an online business, where should they start when it comes to funding?
Yeah, I think with respect to funding for DTC brands and online businesses, the market has shifted a little bit. We saw a lot of funding come into the space over the last 5, 6 years, and a lot of that capital was willing to fund highly unprofitable companies. So it was not uncommon for new brands and merchants to go out and acquire users with a CAC to LTV ratio that wasn't terribly effective. And I think the market has matured a bit to where investors have learned what works and what doesn't work. And they're much more keen on finding merchants that have figured out how to acquire customers, build some kind of long-term repeat relationship with them, and actually make money with their business, which is the goal of the business. So it's a shift in the market that we've seen. The good news is the channels through which you can reach those consumers have gotten cheaper. Obviously, with the global pandemic, there's been a big rush to e-commerce. And so more consumers are buying more of their products online. In fact, eMarketer just came out a few weeks ago and said that they're projecting 18% growth for e-commerce in the US this year, which is the fastest growth in history. And they've been tracking it since 2008. So a lot of tailwind for merchants and brands online. But you've got to try and figure out how to build a profitable business earlier than perhaps you would have 5 or 6 years ago if you want to attract outside capital. Obviously, there are a lot of folks who build these businesses from the ground up with their own capital and build them profitably from day one.
That is awesome advice, especially for folks who are really now just taking a vision that they've had or an idea and really making it into a growing business. But let's shift gears a little bit and focus on those people who have already really established their business and they're now really scoping to try and hit their first 5, 10, or even 15 million. What advice do you have for companies as they continue to scale?
I mean, one is you've got to build a product that people love. I think consumers have become a lot more sophisticated about what they're buying online. They were willing to try new things, a year or two ago, maybe 3 years ago. Now they have a higher level of expectation in terms of quality. They have a higher level of expectation in terms of customer care. They have a higher level of expectation in terms of shipping and delivery and response times. But the other aspect that we're seeing is the advent of social commerce. So if you can find ways to build community, build brand. There's a company in China called Pinduoduo, which was founded in 2015. So it's basically a 6-year-old company. Did about $144 billion in sales in 2019. It's a very social experience for consumers. And we think that trend will eventually at some point come to the US. It hasn't really yet, but the idea of buying things that your friends are buying or building community around your brand and getting people excited about new product launches and things like that, relatively new in the US, but it's been happening in Asia for years. And the Asian e-commerce market, particularly in China, is actually much bigger and has grown much faster than the US. So if I were a merchant in today's market or launching a new business in today's market, I would spend some time studying what has worked in China and look at how I might replicate some of those growth models here in the US. It's a huge opportunity in our minds.
So we know that customers are valuing experience more than they ever have before. So let's shift gears and talk a little bit about online and offline. Prior to the pandemic, we saw a lot of DTC brands, especially doing offline pop-ups or really just trying to build their offline presence. How does having an offline presence really add to the online experience? And maybe who are a few brands that are doing this really well?
Prior to the COVID pandemic in February, March, we would have argued that having an online and an offline presence was a terribly effective strategy. I'd say right now we don't really know how that's going to play out. The one thing that I would say we're super bullish on is there's going to be a lot of real estate available. A lot of the large shopping malls and even smaller shopping centers are going to find that some of their tenants don't have a viable business model in a go-forward world. And so there's opportunity there. And I think what you'll see is smaller up-and-coming merchants who have the resources to be innovative and think outside the box and have built a business online will find ways to take advantage of some of that lower cost real estate in different geographies around the US and build really compelling experiences. We don't know what they're going to look like, but I talked to a friend of mine who runs a shopping center REIT, and despite their business getting crushed over the last 3 to 4 months, he said he's seeing some really innovative concepts come down the pipeline. So that would be my challenge that I would throw out there to any emerging merchant or brand is think outside the box, think creatively, think about how you might create a experience for consumers, pick a demographic. I think that the late teen demographic, into college and right out of college is an incredibly compelling demographic to go after that no one has really ever catered to. If you think about some of the old retail storefronts like JCPenney or Nordstrom or even Walmart, they don't particularly cater to that demographic, and yet those are the retailers that took up the most square footage in our country. So in our minds, over the next 3 to 5 years, we're going to see some really cool stuff pop up. We don't know what it's going to look like, but my sense is it will be folks that have built really great experiences online, finding a way to somehow tap into that community, that social experience, and then build something offline that's super cool. And so anytime we have dislocation in the market, there's always innovation that comes out of it, and I think that's the bull opportunity that we see going forward.
And with experience comes content, and we've never been more hungry, I think, for content than we have really in the past couple of years. How can companies really leverage a content strategy to build and scale their business?
Yeah, so if you look at the fastest growing and most successful e-commerce platforms in the US today, in the public markets, you've got companies like Etsy, which has built a great community around sort of art and niche, communities of people that build really unique items. Obviously, you have Amazon Marketplace and eBay that have been around for a long period of time. And then in the private markets, you have companies like Poshmark and Wish and Fanatics and Houzz that have built these really passionate communities around their products and services. And we think there's just an enormous opportunity there. So pick a demographic, pick a category, build a social following, integrate that community aspect. I mean, that's one of the things that Poshmark has just done incredibly well and gotten to several $1 billion of sales on, is building just an incredibly passionate community of buyers and sellers. And we think we're going to see a lot more of that as people figure out how to integrate the social experience with the commerce experience. And again, if you look at what's happened in China, on the WeChat platform in particular, which is sort of like China's, if sort of WhatsApp, well, I guess if WhatsApp became more commerce oriented, it would be very similar to WeChat. But huge, hundreds of billions of dollars now in e-commerce happening on the WeChat platform. And we think we'll see something emerge here, whether that will be on Facebook, whether that'll be on Instagram, whether it'll be on Twitter or Snapchat, we don't know. But we do think there's a big opportunity for that social commerce experience. And so as a merchant, how do you pick a demographic and capture the zeitgeist of that demographic? And I just think the teen demographic, I mean, Snapchat has built its business off of the teen and sort of college demographic. We haven't really seen anybody do that in e-commerce. And that's a demographic that if you go back a decade ago, wasn't terribly attractive to merchants because they didn't have credit cards, they didn't have spending power. But now in a digital age where they can buy things, they've all grown up on Amazon Prime, they've grown up with a phone in their hands, they have Apple Pay, they have PayPal, they have all of these digital forms of payment. To me, that's a very exciting opportunity that we're going to see some companies go after over the next few years.
So it seems these days that investors are really evaluating brands based on their ability to lower their customer acquisition costs and while increasing customer retention. As an investor, what are the best tactics that you are seeing to do this right now in the market?
So I think in terms of customer acquisition, it's a challenge, right? Because the obvious place where everyone sort of grew up spending money was Facebook. And as Facebook got larger, they had a lot of pricing leverage in that equation. And as demand was high, they could keep raising price. And so for most of our portfolio companies, we saw their customer acquisition costs rising every year. Now they were also trying to increase LTV on those consumers. The one thing that's happened in the pandemic is advertising rates across Google and Facebook and other platforms have come down. And so ideally as a merchant, you take advantage of that. You start to build your own community with a social following and then leverage that with great content. The one thing I'd say that the trend that we haven't seen really work is the whole influencer community. A lot of folks spend a lot of money through those channels, and it's not bad. It's just I think consumers have sort of realized. The analogy somebody gave me the other day is back when Buick sponsored Tiger Woods, and it didn't really work as an advertising medium because nobody really believed that Tiger Woods drove a Buick, and so. I think what you're seeing is people sort of look beyond the influencers and realize that they're getting paid to market those products. And so finding that authentic community, building relationships with that community, and then staying in touch with them with great content. And that's the beauty. It's one of the reasons why Instagram is such an effective platform is the content is great. We've seen tiny, $500,000, $1 million merchants that are building great content on Instagram and building a following very quickly. The other area that we haven't really seen anyone capture is referral. And there are lots of referral technology platforms and programs out there. But think about how many, and this is sort of the essence of the social commerce model in China. Think about how many products you or I buy every day that we love and we want to tell other people about. I mean, I refer friends to buy the products that I love all the time, but there's no mechanism there. There's no reward, there's no benefit, and there's nothing to encourage me to keep doing that. And it's also hard for the merchants to even track that. So if I recommend, a favorite bottle of wine to a friend and they go buy a case of it, very rarely will a merchant even be able to track that. And so that word of mouth referral economy is something that we haven't really captured here in the US, but it's kind of at the essence of what's happened with social commerce in China. And so another opportunity area we would encourage folks to try and explore. How do you get followers on your email list or your Instagram or elsewhere to become loyal ambassadors for your brand and really market your products for you, which is the ultimate way, how does a super hot restaurant get popular through referral? And very few hot restaurants spend any money on marketing, and they become incredibly profitable businesses. So to me, the essence of a great next-gen DTC or e-commerce business would be to build it on brand loyalty, referral, and word of mouth. And we've seen some of that. We haven't seen anybody really build their entire business on that yet.
We've seen so much change in the e-commerce industry, especially over the past 5 to 10 years. But something that really holds true today is that brands really should try to be profitable from day one. How can a content strategy really help achieve that?
So in terms of building a business that is financially viable from day one, a couple things I think we have to think about. One, if you look at sort of the offline business world, a lot of folks that start companies are not super savvy around how to manage a business from a financial standpoint. And so one of the elements that I often recommend to folks that are just getting started is make sure if you're not savvy in terms of how to run a business from a financial standpoint, find somebody who is. You can contract with a third party, you can find a friend. But one of the biggest challenges that we see is if you do have something that works, if you have a product that people love and it starts to take off, understanding the mechanics and the levers and how you run your business, not just from a CAC and LTV standpoint, but what is your cost of labor, what is your cost of shipping, what is your cost of production. In fact, one of the things I often recommend to folks is to watch Shark Tank or watch The Profit. These are shows that are on CNBC and often provide really great lessons in how to run a small business, because that's, whether you're online or offline, you're running a small business. And widely cited data, 20-25% of small businesses fail. The reason a lot of them fail, some of them fail because they don't have great product market fit. People actually didn't want the product, or they didn't hit the market right. But a lot of them fail because they're just not well run. And we didn't all grow up. I didn't go to business school. A lot of folks don't go to a business school, so they don't learn the fundamentals of business. And so part of my advice sounds very simple. It's whether you're running a hot dog stand or a dry cleaner or an online e-commerce business, find a way to leverage someone who knows how to run a business from a financial standpoint. And that'll help you put in place the mechanics from day one that will help you grow the business profitably over time, because it's very hard once you start to build that business and you're generating hundreds of thousands of dollars in sales. It can be hard to shift course if you've built certain key components into your business, but understanding things like gross margins, distribution costs, if you have an online storefront, what is your true cost to run that storefront? The technology to run an online business today is 10, 20, 30 times cheaper than it was 10 years ago. I mean, if you wanted to run a business like you can run today on BigCommerce, it would have cost you, literally 10x 10 years ago. So the tools are there. You just have to be thinking about it from day one in terms of how do I run this business in a profitable way. And it's going to happen. There are going to be tons of businesses that get built in the next 3 to 5 years, particularly as we see this huge tailwind from the pandemic with consumers shifting their behavior online. We don't think that trend stops. We think that trend goes for the next 5 to 10 years.
And on the topic of ever-changing e-commerce, we've really seen customer behavior and expectations change so much in the past few years, let alone in 2020 with everything going on with the pandemic. What are some of the most important shifts that you've noticed?
Yeah, I mean, customer expectations have shifted a lot. I mean, think about in your own life or your own experience, the first product you bought that you saw on Instagram, 3, 4, 5 years ago to where you are today. And first of all, there weren't ad units on Instagram in the old days, and so you were buying products that you saw from brands that had created great content, and you went and purchased them. And now there's a much more integrated experience. And you've got obviously millions of new merchants that have set up shop on the internet that we can buy from today. The challenge is, it's all, you don't want to just have a customer buy from you once. You want them to buy from you multiple times, and that's how you develop the most profitable relationships with your customers. But to do that, they've got to have a great experience on the initial purchase. So the checkout experience has got to be super easy. You've got to have things like PayPal and Apple Pay available to them. That's become, kind of a minimum standard. 5 years ago, most sites didn't have that. Today, the best ones do. And so that's become a kind of a minimum standard that the consumers expect. Secondly, they want to know when the product's going to arrive. So a very simple thing that Amazon has created in the minds of consumers is that you should have a reasonable expectation of when that product is going to arrive. And I know in my own life, it drives me crazy when I venture off to a website that I hadn't purchased from previously. I buy the product, and 2 weeks later, I'm wondering where it is. So creating that expectation of when a product will arrive, and then having a reasonably effective supply chain operation so that you can actually ship and deliver the product in the time frame that you've promised it. And then the third one is customer care. What kind of customer care are you going to provide? Are you providing live chat? Are you providing email? Can somebody go onto your website and have a good customer care experience? Because we all have issues, whether it's a shirt that doesn't fit, or a product that was just the wrong product, or I just changed my mind. I want to have a great experience with you as a merchant And so that customer care experience is super important, and it's something that people really underestimate because, again, I don't want you to just buy from me once. The way I build a profitable relationship with a customer is you come back to me 2 or 3 times over the next 12 to 18 months. So all of those things, the bar has gone up on all of those things. And, particularly we talked about earlier, going after that younger demographic, that teenage to college to just post-college demographic, they're digital native. They've grown up with an iPhone in their hands, and their expectation on all of those vectors, the order experience, the shipping experience, the customer care experience, is that it be, they have a pretty high expectation. And so if you want to target that demographic, you've got to have a great experience. It's very technology driven. And the good news is that for folks who are willing to invest in the technology, it's all out there. But it's pretty hard to compete if you don't deliver a great experience on all fronts.
And lastly, for those tuning into this session, what are a few key takeaways you'd like them to walk away with?
Well, a couple things I'd encourage folks to walk away with. One, we're in the early days of this market. If you think about e-commerce growing in the US this year at 18%, which will be the fastest year in 10 years, as I mentioned earlier, but it's still only like 15, 16% of US retail. And so the opportunity ahead for you as a brand, as a merchant, as somebody who wants to start a business today or in 90 days or in 6 months has never been bigger. There are more people on the internet, more people purchasing. You've got younger demographics with spending power. You've got older demographics that have now come on to the internet to purchase in a big way in the last 6 months. And so, I don't know, from our vantage point, the opportunity over the next 3 to 5 years is massive. So if you've ever thought about starting a business online, now is a pretty good time. You've got this huge tailwind in consumer behavior. All the technology is available. The challenge is, of course, the challenge in starting any business is to come up with a great idea, come up with a product that you think people will love, build something that's differentiated, and then look to build that community, that social experience, that brand loyalty. But I'm pretty confident we are going to see some great businesses that get started in 2020 in the depths of one of the most challenging times for our country. We're going to see some amazing companies that get started this year, built, and we're going to look back in 3 to 5 years and say, oh my gosh, that company is awesome. I love their brand, and they got started in 2020 because they saw an opportunity. And all of the digital payment is bigger than it's ever been. Mobile commerce is bigger than it's ever been. Social commerce is going to create a tailwind that we've never seen before. So I'm pretty bullish. I know it's hard for a lot of folks to be bullish right now because our country's going through a very challenging time. But if you're an entrepreneur who wants to be in the e-commerce and DTC space, there's arguably never been a better time.
Thank you so much, Jeff, for being here, for sharing your expertise and helping us make it big. That was a great session with Jeff Richards, Managing Partner at GGV Capital. Be sure to engage with us on social media using the hashtag MakeItBigConf and share what you've learned. If you're looking for more insights, be sure to tune in to more Make It Big conference sessions by heading over to www.bigcommerce.com/makeitbig.